It's a little bit of a mixed picture. I mean, the Walmart piece is the one that everybody's focused on, but we've also had some better earnings, or at least decent earnings, from the likes of McDonald's, and then on the, UPS is actually looking up. How do you sort of make sense of this?
Well, I think the market is feeling it as if it has a yoke around its neck that might be tightening, and it doesn't know how tight. We either go the way of Netflix, where it's not as bad as expected and the stock zooms, or you have a name like Snap, where it's worse than expected and it's a disaster. So there's a very big range, and investors are incredibly nervous. So, yes, you're going to have better than expected. I mean, if we even look at what we saw with Coke, extremely good numbers. I think that the GE numbers better than expected, but they've had plenty of quarters to be cutting costs and preparing for a time where things start to improve. Walmart, yes, the middle class, many shoppers don't have the available funds that they had, and so it's not surprising that this was a weak quarter. But if the stock's down less than 10, I don't think that's a disaster. And we're just walking this very thin line carefully, hoping that if the weak economy, and we know it's weak, is not taking things down more than, worst case scenario, we can live with that and maybe not retouch the lows again.
So, but here's the sort of perverse relationship between the earnings story we're hearing today and what we may hear or not come Wednesday. Probably less about the 75 basis point number, which I think everybody agrees is upon us, but really what comes next and what kind of forecast you think the Fed gives us. The worse these numbers are, the less they may have to do, right?
Right. Well, correct. And I feel that what we're getting so far confirms 75 basis points. Unlikely that 100 basis points comes up as something realistic. We're meddling along. We've got an economy that's weak, but not incredibly weak. Inflation may be peaking. We're going to hear more about inflation from the Fed, and I don't think that they're going to be incredibly hawkish on the upside of rates, because we've seen gas prices come down, some commodity prices, real estate seems to have stopped moving higher, and a few other categories that would be able to calm down the fears of we get 100, maybe, several of those. I mean, that seems extremely unlikely. And this could be the worst. And we can start to see something in the second half of the year that calms markets down and feels as if it's beginning a recovery again, whether or not we call this a recession.
What are you expecting to hear from some of the big tech companies that we're going to be hearing from later this week? We've got Microsoft obviously on tap, Amazon and the like.
Yeah, well, remember, if we can remember back to a quarter ago, the market was moving along very nicely, peaked in January, and investors were nervous about what the big tech names would say. What they said was not comforting. The market dropped, incredibly fast from the beginning of earnings, mid to late April, May, first half of June. And I believe that was precipitated by a lot of the tech names. Right. And concern about where they were going. The resilience of a name like Microsoft, that the multiple has dropped down. I mean, it's in the 24 range. It sells at about the same level as, Pepsi. You can make a case that the tech stocks, Google, you strip out other businesses in cash, and that's 16 times earnings. So we're below a market multiple, and these names are resilient over the long term. They should have earnings that we can feel are comfortable over a 5-year period of time. We believe they're attractive right now. If they turn out to be less, I would say, resilient and stable than forecasts and investors are believing, I think that's going to be a problem this quarter, because they will lead the market down again, as they did before. Well, that's not our belief. We think that down 20% in a market is sufficient damage right now.